Hey guys, it's Will. Sorry I haven't done a video for a while. I should have been doing them more regularly. What I do is I go through the markets and I also talk about specific sectors and sometimes stocks to look and talk about techniques of trading, technical analysis. I'm using TC2000 here. I've got different tabs on here and also down here, so you have a lot of information in a short space. And then on the right I've got the charts. If you want to get a free trial or $25 off your membership, you can check out the link in the description below. So for a little while, NASDAQ, if we scroll back here, I use the roller scroll bar on my mouse, the scroll wheel. I drew a line here. So there's some, on TC2000, there's these drawing tab tools, palette here. And every time we got kind of up to this line or the 200 day, near the 200, but more accurately, near this downtrend line. And that means we have lower highs here and lower lows, generally speaking. And so here we had kind of a double bottom, but so you're getting these swing periods of time when it goes up, down, up. And this time, there wasn't a lot of room to go up here. Had a double bottom, got some support at the 50, but now we broke back down below. And the 50 days below the 200 day, which is generally a bad sign. So you see when you have an uptrend, you get the 250 above the 200, you get the 20 or 34 EMA, 20 EMA, whatever ones you use for shorter time. You're generally 50 above 200 in an upsloping direction. So if we go to the weekly, I'll turn off the diagrams here. You can see that we were going up and pulling back and having a steady 200 day. Then all of a sudden, when they started pumping money in after March 2020, we got this parabolic move. So that's got to come back down, like it just stretched too much. So now we're getting down to a more reasonable slope in terms of continually increasing. But now if we zoom in a bit on the weekly, we're below the 200 week. We broke through it. This is the third time. So you've got these support low points at, right around here, recent ones. And we're heading back down there. If we break through that, then, we have to go quite a bit back and look at other support points, like the pre-COVID high, stuff like that. So one thing I've talked about it, and I'm sort of focusing a little bit more on it, which is because I want to avoid some of the little, like when you have these pullbacks here, if you use the 80 EMA, you see how it broke below the, if you use the 34, that can keep you in longer period. But this down here is the price percent oscillator, which is momentum. And we crossed here, and then we crossed way up here. And this whole time we were above the moving average. And then when you get to above zero is right where you break 50 usually. That is a strong momentum period once you're above zero. But what happens a lot of times, you break through the 50, you pull back, support at the 50. So once you saw this, and this is in candlestick theory, this is a kicker signal. So you have a candle that starts here and goes down, and then you have the next day it starts at the previous high or the previous open and goes way up this way. So they go in opposite directions. That's a huge strong candle, because if you look at the gap between there and there where it finished, where it closed and where it closed the next day, it's huge, a big difference in opposite directions. So that can be an entry point. But so when you have this situation, if we look at the other ones, broke through the 50, 50 is below the 200, kind of this, I'll turn on the lines again, but we keep breaking off of this, bouncing off of this resistance, and now we're heading back down, crossed over here. So we're in a downtrend. Dow Jones was the best performing one, with the 50 just above the 200. But we crossed down here, you can see, in the momentum. So what I was getting at before was to avoid some of these getting out and losing money with the red volatility stop and a little bit of a break below the, there's a couple ways, but instead of like getting out and then potentially getting back in or not getting in, you can look at this MACD line, price percent oscillator, and see that it's above the moving average and hasn't crossed down. So it's got a nice upslope. So as long as there's good upward momentum, you can see how it started to slow down here and flatten out in this area. So that's when the risk becomes higher than it's worth, because if you got in down here and you got this rode this uptrend and momentum surge, once it starts flattening out here, you know, your gains are probably limited at that point. So you can sort of look at the momentum as well as your main focus. It happened back here. You had this period of time from here to here. Once you get up here, like 1 or 2, if you look historically, the peaks, you know, these ones got lower, but you get up to 2 roughly. So you're starting to get to the point where you're not going to necessarily get much more gains. If we go back here, it's at 3.6, so it's a bit higher than where it is now. So you don't necessarily have to get out up there, but when it starts to cross down, you know, you could potentially go higher than that. But when you have this crossover going down, that's when, you know, that's a sign. So right now it's near the 50 and the 200, so we'll see if it can support there before you make any main decisions. So I've got a column here in my chart. It's called PPO slope. And so I want to see that the slope is upward. So for example, on the NASDAQ, it's negative 0.26. That means this slope here, this PPO line, is down. So you don't really want to be buying when it's unless it's above the moving average. Sometimes you get little curlbacks here, but you see how it never crossed. Like there was a little bit of a downslope just right there, but it's above, so it never really did much. You know, it didn't get down and cross through. But you know, especially when it's crossed down and it's in a downslope, that's not you know, a great spot to be. So the VIX, you can see, crossed here, and it's got an upward sloping price percent oscillator. So we don't have a higher low yet, but like over here, that would be a sign you're going to see. You have a cross, but you don't quite have a higher low. So it is a possible spot right here that things are going to start to turn around. The interesting thing, just quickly, if we go to US dollar, because Japan and other things, the markets are going down at the same time that the US dollar is weakening as well. So usually when the dollar weakens, you see the markets will go up. The dollar index is actually has a lot of different currencies in it. So it's not just, you know, UK or anything like that. It's got Japan, which is, they've been dicking around with interest rates and stuff. So US dollar is not doing great, but at the same time, the indices aren't doing great. People are expecting a Christmas rally, but you know, that's up in the air at this point still, as you can see from these charts. So once you see kind of the negative aspects, that, you know, it should put you in a fairly cautious mode. As you see, the VIX crossed over and it's slowly building momentum, and that could shift. That could indicate, you know, this surge potentially, but it's still pretty low right here. But once I see the negative bias, I'll be looking at inverse ETFs more so than bullish ones, but there are some exceptions. You can see, and so this is what I was getting at with the price percent oscillator. You're up here at 3.3, which is getting up there like historically. You know, we're at 3 at this previous high. Over here we were at 3.27. It doesn't mean it can't go higher. Like here it went way up to 9.38 with this really parabolic move. So it's not 100% guarantee. But this is generally you know, other than the fact that it's crossed the MACD a little ways back, and it's quite a, you know, it's quite a bit above zero here. So you want to get in sooner when you get these crosses and above zero, above the, especially when it's above the 50. You could ride it up to the 200. If it starts to break the 200, you can get in. So there's a couple of entry points. Once you see support at the 50, you could potentially sell here at the 200. And when you get a support here or up here when it gets above the 200. So right now we have an interesting spot where we've pulled back to the 8 EMA, and then now we've gone up again. This is pre-market. But the only thing I don't like is that, you know, we've had a good run, you know, and it's fairly established in its uptrend. So the other thing that you can do, like in terms of stops and stuff, like other than this pivot like this, is well, you're using the pivot, but you can just sort of focus on these pullbacks here, and that's your recent low. So when you're buying anything, you can use that as your stop, or just below that. It's a bit further away than, say, using the volatility stop sometimes, but it's a physical spot that showed support, and more so than the volatility stop. And so so sometimes in an uptrend, you see these red volatility stops. You could say, well, I'm going to ignore that because it's still above the 8 EMA, and that would keep you in. But down here, if you bought down here, you could wait until you see another major pullback and use that as your next stop, before, instead of using these green volatility stops, and then you would get out there. So it's a bit more patient, you know, it's a bit using more patience, because it, you know, it could pull right back and you could lose all your gains. But if you're patient and you see it pull back, and once it starts to head up again, you can move your stop and use that as your next low. And that's a more patient approach. The other option is, if you're using the volatility stop, sell it when it goes red at this spot. But when it gets back up, you could wait for it to increase momentum, like this upslope here, and maybe get in there. So you're not going to catch everything, but and so GDX and silver, I don't like the fact that this is sloping down. Right now in the pre-market, it's up 2.5%, but it's you know, the PPO's slope is a bit delayed in terms of its performance. In terms of the price action, it's not exactly reacting. You know, there's a bit of a delay there, but to be safer, you'd like to see a nice uptrend like this, you know, and ride that up with an upward momentum. That's kind of my approach. So you see here silver, the hedge ETF. This is pre-market, so it's definitely subject to change by the time the market opens. But so anyway, one last thing is the inverse ETFs. When you see the downtrends in the Nasdaqs and stuff, you can look at the PSQ. So I'll just show you right now. I got a couple things. I'm in inverse that and DOG, which is the inverse Dow Jones. So you don't have a rising bottom on the Dow, but on the DOG, but you've got a double bottom. Of course, you hit the 50. So unfortunately, there's a bunch of resistance with previous, like you've got the 200, the 50, but the stop is basically here. Instead of using volatility stops, you're using these physical spots where it pivoted, like here and here. So you're using the actual price action. But and here you can see how we crossed, and we're heading up like that. And same with, I'll go back to the Nasdaq inverse. You know, momentum's crossing. We're getting close to being above zero. This looks better. It's above the 50, and the 50 is above the 200. There is some nearby resistance here. It might only get to these spots if it does at all, but once it, it has to break that. So if you bought here and you're waiting, you might want to wait for your next opportunity to get more or to buy in if you haven't bought in. And that could be at the break of the, so I'll just go back to the NASDAQ. It's dropping strongly here, but you might want to wait if you're going to get in or put more in for a break of that recent support before you, or like you could also, if it comes back here and it fails at the 50, again, like it bounces off and starts going down. But you do have this recent support that's going to potentially limit the amount it goes down. So I've got a variety of scans, but the general gist of what I'm looking for is initially a crossover of the MACD, price percent oscillator. A price percent oscillator should be above the, I'll show you the scan here. Crossing up over the moving average. I don't know if I need that, but it's above the moving average. So, because sometimes it can reverse back down, but if I have a delay in the, you can go back so many bars, you don't have to say it's instantly, but so I look for a cross, I look for the pre-PO to be above the moving average. You can also look for something that is above the 8 EMA. Because you don't necessarily want to get in when it's below the 8 EMA. Like right here, the price percent oscillator is above, but you're having this pullback. So what I'll do is I'll create a variety of watch lists. So what I'm saying, this is a downtrend. Once I see that it's breaking that, I create a broke downtrend. TBF, you see this downtrend is starting to break. It doesn't have a higher low yet. Okay. So I've got that. Then I've got waiting for a pullback. And I haven't updated this morning, but you see we have a higher low technically, from that previous one, but it bumped up here, so I don't want to buy when it's shot up like that. So now I'm going to probably say pulling back. Or I'm waiting for a pullback. I can move it into pulling back, so I'll show you that one. Well, before I do, I'll just see how this jumped up like this. I'm saying waiting for a pullback. So I look at these ones. I'm like, okay, it broke the downtrend, and I'm waiting. So then when it does, I move it to pulling back in an uptrend. But once you break, and it's questionable when you have a pullback, is it a strong pullback or not? Because if it's still above the 80 EMA, like this isn't really a major pullback. It's just one little doji. So that's questionable. But when you're getting a pullback, you have to determine, is it breaking the higher low sort of pattern? So this is below the 80 EMA, that's definitely there. This is pretty strong. This one looks pretty good, but they're a little bit weak in terms of strong pullbacks. But the question is this now in an uptrend? I would say no, because it broke the 8 EMA. So what I'll do is I'll right click on this and I'll remove the TLT. Same with the government bond. We've had a crossover here and a break of that recent. So that's kind of what I do. There's a little bit of maintenance. China's pulling back. It's about to cross, so I'd probably take that off, but it's still above its V-stops. So, but I'm generally probably going to remove that one. Gold is a little bit weak in Canada. There's a CGL bullion. It's stuck at the 200, but there's a downsloping thing there. So it's still in an uptrend technically with the higher lows, but now silver is not pulling back in an uptrend. So what I'm going to do is flag that, because that's one that I want to buy potentially. So I'll show you the flagged. This one is similar, where it's in a pre-market, but we have this new low now. A higher low. and now it's jumped up again. This one's quite volatile. It goes up and down quite a bit. So I'm not going to flag that one, but I'm just showing you. I'll go over to my other watch list called Flagged. So that's what I like about TC2000. If you want to get a free trial or $25 off your subscription, check out the link in my description of the video. I haven't looked at this lately, but the VIX, I put it here because of its crossing, and it doesn't have a higher low, but I just want to keep my eye on it. That one probably shouldn't be in there because it doesn't have the higher lows yet, but this one has a higher low. Natural gas is also quite volatile. This is actually not in a pre-market right now, but in terms of it's not open, I guess, for that one. But wheat is curling back down, but you see it had a higher low, so we'll see what happens with that one. But these are just ones that I want to keep my eye on. Now this one just dropped below. So UUP was not great at all, but it was starting to flatten here, so that's why. So I'm going to take that off. Biddy is something you might want to buy fairly soon, but it does have nearby resistance up here, but it's starting to pull back after this little. I wouldn't personally. Yeah, this is a possibility actually because it's an inverse. In Canada, there's a US dollar Canadian exchange, and the dollar is doing quite well, especially with oil going down, even though like the UUP US dollar index is not doing as good overall because of all the other indices. So HUN is a natural gas in Canada. It's technically got higher lows, but you'll see what happens right around here. And silver's doing good, like I mentioned. So I think we've got a whole bunch of scans here, but really what I'm looking for is a crossover, it being above with higher lows. That's the ultimate. And every time there's a new pullback and then an up day, above the T line, you can potentially get in somewhere near there and add more to your entry or get in if you haven't gotten in. But as you get up further and further, there's, you want to see eventually something like this. It goes back down, and then you're starting to slowly build up again, so you get these waves. All right, guys, I'll talk to you next video. Please check out the link for the TC2000, and thanks to everybody who's picked it up. It's a great program. I use it every day. I love it, and it helps quite a bit. So talk to you guys later.